So people use these moving averages, they say, because this is what the institutions use. So I put the yellow 20 and EMA style 20, and I put a 50 simple. And the 50, you gotta love the 50 because it's right down the middle there. It's halfway between 100 and 0. And according to the daily trend, you should be short the euro dollar. And this is what people would say in their newsletter. And, you know, they're right for the most part. The only problem I'm having here is, say I am short based on the conventional wisdom of the moving average system. And unbeknownst to me, unbeknownst to me actually, I decided to tell the broker, hey, well, you know what, for kicks, let's throw a stop in up here. I know that my holy grail, and of course I know that I know the big banks, you know, the ones that charge fees because they're so stupid, they can't make money. And so they're you know, they're like, hey, this is what we use as a 20 EMA. When it's below the 50, we are short as you can be. And I'm like, me too. I want to be one of those cool. And then I got even my breakout fill here. I went short perfectly. Things were all quiet. It's beautiful. I put a self stop in here like a gumpster, just like a like, hey, yeah, well, I learned how to forex trade too. And just for kicks, I sold one right here because it was a round number, and then I sold one here at the 50-yard line. I'm like, I'm selling that, and I'm going to sell more if it comes down, and I'll show you. And I'm like, man, I'm loving this trade. I'm just going to I'm going to move my stop. I got in here. Let me move my stop up a little bit here, and I'm doing okay on this trade, man. I'm loving it. Hey, like, you know what? Let me add to that. In fact, let's get in right here. Let's add to that, and then Kabusho. Wow, what the hell's Kabusho? And then look at the volatility, just goes back to like, oh, we're just going to drift down. This is Sunday night. This Sunday night, this little baby bar. And, geez, I can't believe I blew up my account. It's crazy. Now, also, the breakout traders made money here, but if they didn't get out, like if they have a stop down here and they're like, yeah, you know what? This thing's going up on my 20 EMA on the 4-hour. I'm loving that 20 EMA on the 4-hour. And yeah, it's going on the moon. And it does go. And you had to cash out there. You had to cash out. And if you look at the daily, you can see where we were going for. Let me scooch back here, zoom out. So you can see the infamous retest of this triangle up here. The daily, this is a no-brainer. And so here the pattern is you're looking for the apex of the previous congestion point. And without over thinking it, we would say that it's quadruple bottom here on closing price with a wedge. And this I would say would be a fake breakout, or this would be the breakout that failed for people that were like, oh, you know what, it's getting very tight here. It's wave 4, continuation. We still have a trend on the 50. It's good to go. And then things get more apexed out, and we have this terrible this is like divergence here when these guys start to come together. On the oscillator at the bottom of the screen, it would look like divergence. And everything gets tight. And then right here at the apex, the falls down this day, comes flying back up to the 100-yard line right at the apex of this whole controversy. And so where does it revisit when it comes back up into here where all these stops are? People put in all their protection up here because they went short on the market does a classic pullback before it drops. So it's right here. This move here is classic. There's the quadruple bottom. Then we bounce off that. They trap the bears here. Then they pull them back up into the 100, and then kaboosh-ola. And people are definitely loving it until this vacuum forms here, and then we go back up, and then it's so we go back up, and then people are like, hey, it's going up, it's great. That's a daily. And where does this come to? Is classically, now this would be the trade that people would prefer, is that you realize there's 1, 2, 3, 4, 5 bottoms that become a top, and you're prepared to sell up there, plus all of the bear bots that are short and all the bear people, they have all their stops sitting up on that wedge. And there's also a big the people that bought that breakout, like they got involved, say, up here on all these fake breakouts. When it comes back up there, they want out too. It's a whole combo plate of the market's just a huge revolving door. That's why there's a reversal up here. And this big void here that gets filled, we crest up into this. This happens on every time frame where you get that retracement back to the scalper's exit, and it doesn't continue north. If it went cutting through there, it could pause here and totally cut through. It's not like it can't happen. And if you were trading without stops, then this was a perfect on closing prices only. Easy, right? The closing, the white line, it's just easy to trade that. Yeah, buy here, we get out here. But if you're holding through this, so you went short here, and you really loaded up in this this situation. So what do you do about that? Go to a smaller time frame, let them stop you out, or cash out on that move, or trade super wide away from the market like this, and just have your orders up in this triangle to sell. So right now we're going right through the floor, and we're possibly going to go all the way to a buck. So we'll go to par finally. It's only possible if we take out. We got to go down 50 more pips here. We've seen this market flirt with the abyss before, but it's always been the boy that cried wolf, sadly. And every time we get to this borderline here, we reject it. Now could be 3 strikes, you're out. This is like actually the fifth bottom, I guess, if you're going to call that last beat. And if you look at the monthly, and you go way back to here, this is where the market should ricochet off at some point. But I don't think it's going to be a straight ride down here. It's going to be all sorts of shenanigans on the way down there, if you even get down there. So you got to go through. Next week you have to go, by the end of the year, you might just probe that area and see the market do a bounce, a cut in there. And it would just look like one of these psycho wicks, but instead of being an inverted hammer like these, it would be a like this kind of dippity-do. The 4-hour looks very fragile. Like, all you have to do is come in here next week. As soon as you take out this price here, all bets are off. We've been, if this is the head for a shoulder, if we're at a shoulder right now, for this to be an inverted head to shoulders, this spike here has to hold, and if they creak that through there, it starts to melt down. Yeah, it's just going to look just like Brexit. It's going to be a bloodbath. To the downside there. I suspect you'd see gold go down to, too. If you wanted to do a crude projection, which is probably the best projection is to go crude, you're going to go right off this, and we're going to have to go probe down here now. Here's the top of that channel. If you didn't quite make it to the top. But these wicks are the problem. It makes it very great to analyze the market, but a little tougher to trade it. We just go marching down here. Here's a beautiful setup on closing price. Bottom becomes a top dead on, but here was the kick out. So if you got in here and wrote it down to here, they're going to come back and kick you out. Then they're going to go for the big ride. Go out without you. Here's another kick. Another big psycho kick. I don't know, you saw that Monday. Big washout coming in there. Killer places to get in just for that slam back. So here's the election wick. Here is the psycho wick, kind of a baby version of the elections. So here's the U.S. elections, and here is the big stop hunt right into this bottom. If you consider this bottom being a top, that makes your top. Not a lot of these setups come around like this. That's a classic. Goes right up into that. This comes right up into the this complete washout. Trap every breakout trader that's getting in on this weekly breakout. So yeah, looks like we're going hell. Euro could just keep just all you got to do is just 50 pips from the abyss, and it's free fall, really. I mean, I don't see nothing back here. People are going to flip out a little bit without regard to these moving averages. I put the 200-day on there. I guess you could curve fit your moving average to fit your argument too. That's the other pitfall of analysis. Yeah, Euro going to hell in a handbasket or without.